So before we jump into the bank rec here, let's quickly compare our books to the bank statement. So a couple of things I would like to draw your attention to. First, we have a cash receipt at the very end of the month on September 30th. So this would be a potential red flag where the bank statement might not pick this up just yet. And then when we look at the checks, we have 4 of them. So in the case of checks, it's not necessarily the later checks or those at the end of the month which are at risk of not showing up on the bank statement. Rather, it can be any given check since we don't really have control over when the payee will cash it in. So we're going to have a look at the bank statement, and we see, first of all, the deposit at the very end has not shown up. So that's something we have to deal with. Also look at the checks. We have check number 22 and check number 23. We don't see check number 24 and 25. Those are outstanding checks which we will have to deal with. So some of that work is already done for you as I scroll down and start the bank rec. So you'll see the item that I mentioned earlier, the deposit in transit, is an item that we have to deal with. We have 2 outstanding checks, number 24 and 25. And we have a bunch of other things from the bank statement. We had a bank collection. We have EFT payments. We have bank service charges, interest revenue, and we also have an NSF check and an NSF charge. So before this month, we had deposited a check and it bounced. So now we have to deal with the money coming out of our account. And we also have to deal with the charge that the bank has imposed on us for trying to deposit a bound check. So before I jump into the bank rec here, note the first 3 lines, just like a financial statement. We have the title of the institution, in this case, SFU bookstore, and we have the nature of the document, which is a bank rec, and then we have the date. This is one specific date because on September 30th, we will be reconciling everything to the bank. So let's go ahead and start this process off. We'll start on the left side with the bank, and the first thing we're concerned with is the bank balance on September 30th. And so, if you have your bank statement open in front of you, you will see the bank balance on September 30th is $3,275.00. Now, the next thing we will deal with is the aforementioned deposit in transit, and we will grab that number from right up here. So let's go ahead, write that in, plus 754.60. Now we can go ahead and deal with our 2 outstanding checks up here. Number 24 will be $85. And number 25 will be $125.50. We can now go ahead, add those 2 outstanding checks up. We should get $210.50. And you'll notice that this is in brackets because this is an amount coming off our bank balance. So we'll go ahead, calculate our adjusted bank balance. It will be 3275 plus 754.6 minus 210.5. We should get $3,819.10. Now let's go over to our book side. We're going to have a little bit more work here, but we've already taken care of the first two items in panel A, deposit in transit and outstanding checks. So starting off with the book balance on September 30th, we will have 3208.60. So there are a couple items that we will be adding. So you'll notice that I've kind of gone out of order here just to keep the addition together and the subtraction down at the bottom. You don't necessarily have to do that. It just makes for a neater bank rec and tends to take up less space. So bank collection was item number 3 for $2,547.05. And then we will have one more addition. That's going to be interest revenue, $1.85. So the format here is slightly different since I only had two items to add. I kind of kept them in the same line as the book balance number. The other numbers I'll put here. So the format is not too strict as long as you kind of know what you're doing. You could have easily put these over here too. But let's go ahead and start. Well, first I'll add this, and then we'll start putting in the subtractions. So 2, 5, 4, 8.9. So that's the total of all your additions. So these two numbers here. Remember at the end when you're adding, you want to remember to add this with this and take away your deductions. So let's start filling in the less items. So we have EFT payments. So we had 450 and 1200. I'm going to go ahead and just add them together to make life a little bit easier. You can certainly write them separately if you wish. 1650 total EFT payments. Then we have bank service charges. That's item number 5. We'll have 650 here. NSF check. The amount of the check was 256.9. And then we will have NSF charge, which will be $25. So when you add up these four items, you'll be taking away 1,938.4. So last but not least, we'll go ahead and add straight down this plus this minus this. It's going to give us 3819.10. So our adjusted book balance confirms with our adjusted bank balance. The numbers at the bottom of either side are identical. So that confirms that the differences at the start of about $67 were all due to timing differences. Over time, and by making the correct journal entries, everything should work out. After filling in the numbers on the bank rec form and completing the calculations, we should observe an expected outcome. The adjusted bank and book balances are the same. This confirmed that the initial discrepancy was indeed caused by a timing difference, and everything will work out well after the bookstore makes its journal entries and the bank adds the deposit in transit and pays checks 24 and 25. Let's now make the journal entries to update the books. Recall that we are making entries for all items on the right side of the bank rec. It's only the book side of the bank rec. We're updating our books. So maybe I'll give you a couple minutes to try this, and we will continue making the journal entries here in this same video. Okay, so the first thing you want to note is that I've had the September 30th date for everything, and that's because that's the day we're making the journal entry at the end of the month. The first thing I'm dealing with here is the bank collection. So we're collecting cash from someone who had us owed us money. So the amount is 2,547 and 5 cents. So debit cash and credit AR. So just going down the right side of our bank rec, the right column, the next thing we have is another debit to cash, this time because of interest revenue. There's a much smaller amount, $1.85. And then we're going into our cash reduction items. So we had a couple of EFTs. The first one was for rent. This one will be rent expense. Pay with cash for 1,200. And I'd like to remind you, if you want to write down brief descriptions, feel free to do so. But you will not be tested on that any longer, so you don't have to. Next, we have another EFT, this time for insurance. Debit insurance expense, and go ahead and credit cash. There's a smaller amount of 450. I'm going to do something interesting here in this next one. We're going to have bank charges expense. So the NSF check created a bank charge of $25. This is really no different from an accountant perspective from the other bank charge we have for 650. So I'm going to go ahead and add those two together. 25 plus 650 will result in a debit to bank charges expense for 3150 and a credit to cash for 3150. If you would like to write two separate entries, one for bank service charges and the other one for the NSF check, you can certainly do that, but in both cases, the journal entry will be identical. Debit bank charges expense and credit cash. So you can save some time and space by making one entry to cover both the 25 and the 650. The last entry here is to record the NSF check. The check bounced in the amount of 256.9. So what's happened now is the cash has to come out of our account and somebody owes us money. So we're going to debit accounts receivable. We have to go after this person for the cash. Hopefully they'll pay us later. And maybe they'll even give us some money for an SF charge. But this is how we update our books for now. Debit AR to make it go up, credit cash to make it go down. And just like that, our bank rec is all done. We reconciled the bank and book numbers correctly, and we've also made journal entries to update our books. To wrap up this chapter, let's talk about the cash short and over account. In any retail business, some cash is usually on hand for completing smaller sales and purchase transactions. A cash short and over account is used to account for minor discrepancies between what is collected and what should have been collected. Let's assume that the bookstore perpetual records at day's end state that there should be $550 on hand, but a cash register count reveals $540. The journal entry to fix this is simply a debit to cash short and over of 10 and a credit to cash. And you see a brief description there. It's the first time you're seeing something like this to account for the short amount of cash. Note that if the cash count had been more than the accounting records, the cash short and over account would have been credited and cash debited. Entries which include the cash short and over account should be small, or there might be bigger issues, such as theft or incompetent cashiers. The cash held by a business for small purchases should be supported by petty cash tickets. It is called petty cash. A custodian should be designated for the petty cash fund. A specific amount of cash should be held at a secure location. So with cash, even though it's a small amount, you want to keep pretty close records of it. Anytime you have a small purchase, you want to have a policy where people place evidence of that purchase, like a receipt, in that same box where the petty cash fund is. So that allows us to go back and reconcile any cash that was used up, and we can make sure that no one is misappropriating funds or stealing from the company. That wraps up Chapter 8. Remember to try the homework and also the quiz.